One of the first big decisions every founder faces is how to fund their startup. Should you bootstrap, using your own resources and revenue, or raise money from investors? In this lesson, we'll explore the pros and cons of both paths and how to choose the one that fits your vision. Bootstrapping means building your business without outside funding. You rely on personal savings, early customer revenue, and lean operations to grow. The biggest benefit? You keep full control. You answer to yourself, not to investors or a board. When you bootstrap, you build with discipline. Every dollar matters. You learn fast, stay close to your customers, and avoid the pressure to grow at all costs. Bootstrap startups often focus on profitability early, which creates a healthier foundation for long-term success. But bootstrapping also comes with limits. Growth can be slow. You might have to say no to big opportunities because you can't afford to pursue them. Personal financial stress is real, especially if you're going months or years without a salary. On the other side is raising investment. Venture capital, angel investors, accelerators, and crowdfunding all offer ways to bring in capital in exchange for equity. With outside funding, you can hire faster, build faster, and scale bigger. Funding gives you a runway. It buys you time to focus on product and growth without needing instant revenue. It also opens doors. Investors often bring connections, credibility, and guidance. But raising money means giving up ownership and control. You'll need to pitch, negotiate terms, and meet expectations. Investors want returns. That often means aggressive growth targets, exit strategies, and high-stakes pressure. The fundraising process itself is demanding. It can take months, involve dozens of meetings, and still lead to no deal. And even if you raise, your cap table becomes a long-term commitment. Every funding round dilutes your equity and increases expectations. So how do you decide? Start by looking at your goals. If you want to build a niche, profitable business with independence, bootstrapping might be perfect. If you're chasing a huge market and need to move fast, funding could give you the edge. Also consider your industry. Some markets, like biotech or hardware, almost require funding due to high upfront costs. Others, like SaaS or services, are more bootstrappable. Think about your team, too. Do you have the right skills and network to grow on your own? Or would an investor's support make a meaningful difference? There's no one right answer. Many successful startups have followed both paths. Some bootstrap to profitability, then raise. Others raise early and reinvest wisely. Some never raise at all and win big anyway. What matters most is alignment. Know what trade-offs you're making. Be honest about your risk tolerance, your timeline, and your ambitions. Bootstrapping gives you freedom. Investment gives you fuel. Both are valid. Choose the one that fits the company and the life you want to build. Let's explore the funding path that's right for your startup.